Welcome to the Cryptoverse DAO, guys. I'm your host, Dharma. We're going to be covering the news as we usually do, starting off with Monday. Hope you're having a good start to the week. Hope you had a good weekend as well. Despite the bear market, hope you've managed to, stay ahead of, not ahead of things, stay above things, and yeah, build. Billionaires are made during the bear market. The way that you build is through education. This is why the Cryptoverse DAO exists. We're here to bring you education. We're here to bring you community. We're here to bring you just context about what's happening in crypto. So, in the interest of that, let's start with we've got a spread of articles as we usually do. The first one is around the merge trade. A merge trade has begun as Ether surges and ST-ETH discounts narrow. So experts are saying that a merge trade has begun. ETH has undergone a rapid change in narrative over the past week, with speculators purely focused on the upcoming merge. We've talked about this a lot as a catalyst for appreciation, one observer said. Renewed clarity about the timeline of programmable blockchain Ethereum's highly anticipated transition to proof of stake instead of proof of work seems to have galvanized investors' interest in ETH, the Ether, the token, and its staked derivative on Lido Finance called Staked ETH, ST-ETH, offering a reprieve to the battered cryptocurrencies, battered by the bear market as they have been, as we have seen them be, and as they do be now. Now, on Thursday, Ethereum Foundation member Tim Biko, which I've butchered that name before, suggested September 19th as the provisional launch date for the merge, which would make sense because September is like the bull run freaking, it's going to be Christmas for crypto. It's going to go from crypto winter to crypto Christmas. Well, I mean, that's not an assured suggestion, obviously. Just a suggestion, not a guarantee. Take that with a grain of salt. But yeah, provisional date, they're looking at September, which does make sense. And this will see the world's biggest smart contract blockchain transition from the energy-intensive proof of work consensus mechanism to a more environmentally friendly proof of stake. And also less, you could argue that consensus mechanism is more like in line with the trustless ethos of blockchain technology, because it's, proof of work involves miners, which, miners are human beings who mine Bitcoin. And obviously, yeah, the energy cost is something to be taken into consideration as well. Since the announcement, Ether has rallied about 22%, hitting a 1-month high of $1,475, according to CoinDesk data. The token registered a 15% gain in the 7 days leading up to July 17th, which was the biggest jump that this particular cryptocurrency has seen since March. The staked Ether's discount relative to the price of Ether has narrowed as well. So it's gone from 0.98 to 0.96 since Thursday, and that's from CoinMarketCap. So the token representing an equivalent amount of Ether staked in Lido Finance. That's what the ST-ETH coin represents. And the discount relative to the price of Ether has gone down from 0.98 to 0.96. Now, it says that ST-ETH's price fell into a discount of 0.93, so it went lower than 0.96, following the collapse of Terra in May. And again, that's something we've covered before. Huge amount of contagion, lots of, just terrible. And has not been able to recover since. Lido Finance is a liquid staking protocol allowing users to stake coins while retaining liquidity and bypassing the burden of owning a minimum of 32 ETH to become a staker. Users can redeem staked ETH for ETH only after transfers are enabled on Ethereum 2.0. Okay, interesting. ETH has undergone a rapid change in narrative over the past week, as they've said, with speculators purely focused on the upcoming merge. So the quote at the beginning of this article is from Matthew Dibb. He's the COO of Stack Funds. Adding to this, we believe, he says, that there is a significant amount of sidelined capital that's been waiting on bullish momentum to kind of sweep up, right? To add, I suppose, volume, to bolster that wave up, that uptrend, that upsurge. Several observers consider Ethereum's impending transition equivalent to 3 Bitcoin halvings. Fucking hell. A programmed code that halves the per block Bitcoin currency supply every 4 years. What this does is it leads to a 90% reduction in Ether's annual issuance. Simply put, the transition is likely to bring a store of value or a deflationary appeal to Ether. The upgrade has been long pending. We've covered all of the delays and the updates and the conversations around it, and we're gonna keep doing that. But hopefully, we won't have to do that for too much longer, because September 19th. If it happens, it happens. If it doesn't, fine, whatever. Maybe they've got more work to do, but it's something to look forward to certainly. And Ether rallies. I'm sure all the alts are gonna rally, man. Everything's gonna be rallying by fucking September. Most likely, again, grain of salt. Like other market participants, Ether, not Ether investors tend to factor in bullish developments in advance. So Ether rallied over 60% to 2,800 in the 3 weeks leading up to the London hard fork. That was on the 5th of August of last year. The hard fork activated a mechanism to burn the portion of fees that were paid to miners. So it effectively kind of like locked that mechanism off, right? Now the ETH 2.0 upgrade has been long overdue and has seen several delays, but recent successful merges, which we've covered, of the Ropsten and Sepolia testnets, the Gurley testnets, planned transition to proof of stake for August 11th, has also raised hopes for the mainnet merge to actually happen in September, like they're saying, because they've kind of given us rough dates before, and then they've gone back on their word. So we'll have to just wait and see. The Foundation's strongest hint, the Ethereum Foundation's strongest hint of the tentative date of the merge on record came as the crypto market looked for reasons to bounce, having priced in much of the bad news over the past 2 months. Ether tanked 60% to less than $1,000 from $2,700 in the past 2 months, as fears of faster liquidity withdrawal by the Fed, by Terra's collapse, contagion. It's just bad, bad situations, bad stuff happening across the board. Three Arrows Capital, that whole thing, people are memeing it on Twitter. It's hilarious. Like, you got the meme is like a chart, and there's like, oh, look at that 3AC gap. We got a 3AC gap in here. Several crypto lenders saw investors dump crypto holdings. This is what happens. Another interesting thing that I saw on Twitter. Again, like, this harkens back to like the initial like those old open source sessions I used to do, where I would talk about like just all this philosophical stuff. And something that I kind of covered was the cycle of how people discuss new technologies and Bitcoin specifically. And it's always something. There's the amount of the environmental impact. There's the the social connotations that come with a cryptocurrency. There's the question of legitimacy. There's a question of regulation. There's a question of this, question of that. And almost cyclically, you see Bitcoin rally, and people call it unsustainable, or they call it a bubble. They say that it's gonna pop and it's gonna just lose all of its value, and it comes back down, right? And right as it's at that point of like changing direction, people say it's dead now, because it's going down, it's dead now. And then it goes back up, hits a new all-time high, and people are like, oh yeah, it's a fucking bubble, bro, like it's not sustainable, look at it. And then what does it do? It kind of evens back out, and when people are in the lower part of things, it's doom and gloom, everyone's gonna die, everything's fucking terrible. Like, it's cyclical. That's the key thing. It cycles. It's not a straight line. We shouldn't like that's besides the point. It's cyclical. It's important to keep that in mind, because it provides context, better context, to better understand what it is you're hearing happening in the world of crypto. Jason Pagulatos, that's a cool name, markets associate at Delphi Digital, told CoinDesk TV on Friday that any positive news at this point is a welcome thing for markets, but it's definitely not the only reason that ETH is currently up. Jason added that the bounce is typical of market action expected following the collapse of May and June. John, a managing partner at Singapore-based Signum, voiced a similar opinion, saying the market has priced in macro and crypto-specific risks, and is now focusing on the upcoming positives. My opinion, says John, is ETH is rising in anticipation for Ethereum 2.0. Makes sense. Also, major firms that have collapsed and inflation announcements, I believe, he believes, have all been factored in. Now, John sees a recovery for both Ethereum and Bitcoin should this accumulation phase hold throughout July. But we have to be mindful, he says, of regulatory impact. And that is a very, very salient point because we're seeing crypto regulation. I mean, it's a part of the news now. We're talking about, we're going to cover India and what their moves are on kind of extreme in one direction. We're gonna maybe we could touch on the UK a little bit. I mean, it's there are conversations happening. It's a part, not conversations happening. I'd say a broad enough understanding of regulation, broad enough that it informs like an understanding of how important it is. Because I think a lot of people don't understand that regulation is really like, well, I mean, yeah, again, that's kind of like, I guess it depends person to person. I suppose it depends person to person, but the point is like regulation is required, but it's required in balance, and it's really important that people involve themselves in the early stages of getting that regulation. Like if there is the chance to kind of influence what that regulation looks like, if there's a chance to influence the laws and exercise this democracy that we have, do it basically. And with the UK, you know, there is the actual option to do that now. It's a bit quiet, but there is if you go on gov.uk, they're trying to do policy reform. And until the end of August, I think there's the option to send in kind of suggestions. There's a questionnaire. They didn't have a questionnaire on it when I initially looked at it. Now there's a questionnaire. So you see what happens, man. They might just scrap the whole thing. So just go, you know, join the Discord group. The email address to email will be somewhere in the Discord, but join the Discord. The link will be in the description of this video. And while you're down there, drop a like or a dislike, drop a comment, do whatever. You know how YouTube works, man. I don't need to tell you how YouTube works. Now, that's John's opinion, and I agree with John's opinion. Regulation is going to be very interesting because it's around the corner. We don't know what it's gonna kind of look like. John is chill with it. He says that he doesn't see it dampening the markets. To be honest, I don't really see it dampening the markets too much as well because all this stuff is profitable, right? I mean, it's cyclical, sure, so you're gonna lose money at the bottom of that cycle, and like you're gonna have your money's going to expand at the top of that cycle. It's gonna like contract at the bottom of that cycle, but it's still cyclical, so you're still moving, you're still going forward the whole time. And that means because it's in constant motion, it's constantly profitable. So there's no reason to regulate it into the ground to the point where it's not profitable anymore, because that's just counterintuitive across the board, right? The bounce, the bounce of Ether is accompanied by renewed user demand for the blockchain, which is a sign that the rally may actually have legs. The rally is not just a fart in the wind. The amount of gas, or a measure of what users pay to the, okay, so gas, like a gas fee, basically. If you don't know these kind of like rudimentary terms in crypto and like DeFi, again, this is why we exist. We have educational content on the YouTube, but we have a Discord server as well, and we're expanding. We're going to be expanding over the next few months in terms of our content, in terms of the way that we deliver our content. So get involved, you know, get involved, and just like we would tell you to exercise your democracy and go like influence the regulation that's going to affect you. If you're going to learn from the Cryptoverse DAO and grow with it, let us know what you want it to look like. Let us know like what what content you'd like to see, how you would like to see it delivered, you know, just whatever, anything we can do better, just let us know, man. And that's what the comments are for. Now, okay, I think that's enough on the Ethereum thing. I think that all makes sense. Let's move on to, is the rally sustainable? I feel like we've kind of touched on that previously as well. In the last article that we just looked at. We can cover it quickly. This is more of a charting thing, isn't it? All right, cool. So Ethereum price breaks out, hits 2-month high versus Bitcoin. Is the rally sustainable? The rally has pushed ETH price towards strong resistance levels, increasing its pullback risks against Bitcoin. So support and resistance, these are kind of like levels of like price action will kind of, it will move price up to a certain threshold and then kind of like bounce down off of a certain price. And when it bounces down or bounces up, changes direction, um, you can, and if it keeps doing that, if it keeps testing like the same price over and over, like if it tries to like picture this sentence as like the level that it bounces off of. So the price is up here, how it charts like a heartbeat. It goes like here and then bounces up and then bounces up and then bounces up and then bounces up. That's a support. That's a support level, is what you would call it. So the opposite would be on the top. That would be a resistance. So that's what they're talking about. The rally has pushed ETH towards strong resistance levels, which increases its pullback risks because, again, support and resistance, it pushes you the other way. So if it's going to reach that upper threshold, that means it's probably going to come back down. It increases the risk of that happening. Now, it successfully avoided a bearish technical setup to reach a 2-month high against Bitcoin. The ETH BTC pair invalidated its prevailing bear flag pattern. Again, these are all things that we've covered in the educational content that's on our Discord server, as in like the flags and the bearish patterns, the bullish patterns, how to read a chart, how to chart a chart, So I would say, check out the educational content on this platform, but also do join the Discord. And again, September, which is, it does make sense. It seems like everything is rallying for September. The merge is happening in September. Hopefully, we're going to see regulation kind of take shape. Hopefully, again, by September. Well, maybe not fully take shape, but the conversations will be a lot more real, I suppose, around regulation at that point. As in, the landscape will have changed bigly. Like, there's big scope for the landscape to have changed. The ETH BTC pair has rallied by more than 22% since the announcement of the September date, reaching 0.067, which is its highest level since May 25th. Furthermore, the pair's sharp upside move has pushed its net retracement gains to 37% when measured from June 13's local bottom of 0.049. And this is the chart. This merge timeline isn't final, but it's extremely exciting to see it coming together. Please regard this as a planning timeline. Okay, cool. I will regard this as a planning timeline because you said please. Ether tests key inflection zone. Strong fundamentals led by the merge launch could have ETH BTC pursue a run-up towards the 0.02 to 0.076 area. That little range. That range was instrumental as a resistance in January. So it was like within that range, it was just bouncing within that like kind of level, that channel, I suppose. This range was instrumental as resistance in January, March, May. Therefore, it should serve as the next upside target for Ether bulls. But there's a catch. Notably, ETH BTC has been showing signs of a weakening upside momentum near, again, it's that resistance level, basically. Sweet. So in other words, ETH BTC could see a reversal towards 0.06 by September if the inflection resistance zone holds for a 9.5% decline. The 0.06 BTC level also coincides with the 0.236 fib line. This is covered on our trading education as well, Fibonacci retracements and all of that stuff. It's just a lot to cover in one. Yeah, I don't want to gloss over it and not confuse you guys, if that makes sense. Because so let's move on. That's kind of what to expect with ETH and Bitcoin come September. Let's talk about Binance being fined over operating illegally in the Netherlands. So apparently Binance did not have the clearance, right, to operate in the country, but they had a very large number of customers in the Netherlands. So the Dutch central bank has said this. Major global cryptocurrency exchange Binance, it's facing a penalty in the Netherlands after failing to obtain regulatory approval. Again, regulation. That's what we're seeing. So this is really, I think we're moving, we're maturing as a industry slowly. It's nice to see. And we are so fucking early as well. Oh my God, that's crazy. But besides the point. After failing to obtain regulatory approval to operate in the country, the Central Bank of the Netherlands, the DNB, has fined Binance Holdings 3.3 million euros for offering local crypto services while not being registered with the authority itself, which, big no-no, probably shouldn't do that. The Dutch Central Bank officially announced on Monday that the regulator imposed the administrative fine in April of 2022, 3.35 million United States dollars. The DNB pointed out that any company offering crypto services in the Netherlands is obliged to register with the central bank in compliance with the Money Laundering and Terrorist Financing Prevention Act. The regulator also mentioned that the DNB had previously issued a public warning to Binance in August of last year. Interesting. CZ said that the exchange was focused on compliance rather than the day-to-day operations of the exchange, willing to accept the senior person with strong compliance background to eventually replace him as CEO. We're going through a pivot from technology innovator to a financial services company, says CZ back in August of 2021. So we need to be fully compliant. I believe that right now regulators across the world. Okay, interesting, cool. So a little bit of context for you there. And now they've been fined 3.35 million to be exact. Now let's continue the story. So according to the announcement, the DNB applied a bigger penalty. So the pain does not just stop there. A bigger penalty to Binance due to the platform's large trading volumes. According to the regulator, Binance had and this is why this is literally the quote they've picked out for the article, very large number of customers in the Netherlands, while its daily trading volumes amounted to 13.7 billion US dollars. The increased penalty was also due to prolonged violations by Binance, the DNB stated. According to the bank, the violations occurred from May 2020, 2 years ago, when the DNB introduced the registration obligation, until the bank closed the investigation in December 2021. So across that time period, from May 2020 to the end of 2021, there have apparently been prolonged violations by Binance. DNB therefore considers these violations to be very serious. Makes sense. The central bank also mentioned that Binance has submitted an application to register, and the registration process is now being addressed. As the exchange has moved to comply with the laws and has been transparent about its business operations, the DNB reduced the total amount of the fine by 5%, which is what the announcement notes. Cool. So a spokesperson for Binance has spoken to Cointelegraph. The company has reached a critical milestone in meeting Dutch regulatory requirements through a locally established entity called Binance Nederland BV. The event marks a long-awaited pivot in our ongoing collaboration with the Dutch central banks, as well as the firm's growing engagement with global regulators across the world, not just in the Netherlands. This is what the representative has said. He goes on to add that while we do not share the same view on every aspect of the decision, as in they probably don't want to part with 3 million, especially if they're trying to do like this hiring push. But then he's talked about like a treasure chest and this, that, and the other. So I mean, well, you have to wait and see. Go on Twitter. Go take a look at his Twitter. Take a look at what they've been talking about there. While we don't share the same view on every aspect, we deeply respect the authority and professionalism of Dutch regulators to enforce regulations as they see fit. With this now behind us, we can continue pursuing a more traditional operating model in the Netherlands. Sweet. So far, Binance has not directly confirmed or denied to Cointelegraph that the firm has paid the fine. According to the announcement, Binance objected to the fine on the 2nd of June. It is now the 18th of July. We will have to wait and see. Tweet at CZ. Ask him what happened. Did he part with the bag? Did he not part with the bag? What happened? And Grayscale, Grayscale reckons we have 250 days left for crypto winter. So now we're getting, this is good. This is positive sentiment. If we're getting kind of semi-concrete predictions about when we're going to see crypto winter end, now it's not if, basically. People are talking about potentially when. Which is nice. Good to see. So the crypto industry has endured some infamous bear markets, and the 2022 downturn will be remembered for its fucking acid test of decentralized finance platforms and over-leveraged trading. Yes, absolutely. Grayscale Investments' latest insight report provides interesting food for thought, pinning the start of the current bear market in June 2022, which could last another 250 days if previous market cycle. Wait, how long is 250 days? I'm sleep deprived. Wait, hold on. That's a lot of days. Let me just calculate this real quick. So, oh geez, okay, that's like fucking 8 months roughly. It's like average 7 to 8 months. Oh god damn. Okay, yeah, that's all right. That's all right. Okay. Um, could last another 250 days if the previous market cycles are to repeat themselves. Grayscale notes the cryptocurrency markets mimic their conventional counterparts with cyclical movements. BTC market cycles conventionally last 4 years, approximately 1,275 days. The firm defines a cycle when the realized price of Bitcoin moves below the current market price. Realized price is determined by the sum of all assets at their purchase price divided by the asset's market capitalization. This gives you a measure of how many positions are profitable, if any are. Wednesday saw the realized price of BTC cross below market price, which, as Grayscale has just said, they define or identify as the start of the current bear market. The firm believes this presents a prime investment opportunity. It's the dip, and this is where you buy, which is set to last another 250 days from July if the duration of previous cycles repeats itself. Retracing history, they call on the 2012-2015 market cycle. Okay, cool, sweet. I mean, we touched on this kind of rhetoric as well before about the cyclical nature of markets in general, and certainly of this specific industry that we're in its early stages. It's cyclical. So they talked about Silk Road. They talked about the Mt. Gox debacle, which led to the first major bear market, the development of Ethereum, major exchanges, wallet providers, gradual climb to the next highs in the market. And this is what's going to keep happening. You have a gradual climb, and then you have a Luna, and then you have another gradual climb, and then something crazy is going to happen, and then you have another gradual climb, and then who knows what, like, bro, it's going to be very interesting to see what the world looks like in the future. Now 2016 to 2019 is going to be remembered for the boom in initial coin offerings, made possible by smart contract functionality introduced by Ethereum. Much of the capital that flowed into the cryptocurrency ecosystem in late 2017 exited the following year as the second major bear market began. The 2022 market cycle will be remembered as a story of leverage. Grayscale notes that investors were enticed to leverage trade with increased government spending during the COVID-19 pandemic. A positive funding rate lasted for 6 months, with many traders leveraging positions with cryptocurrency as collateral. But then when crypto prices dipped, traders were forced to sell, which triggers a cascade of liquidations, which again forces the price further down. Bitcoin drops from a November 2021 peak of $64,800, that was the all-time high, to 29 in June. 29,000, that's where it was hovering. Again, leverage hurt the markets a year later, but decentralized finance's major CeFi players, the major CeFi guys within DeFi, faltered after attracting massive investment with attractive yields. And then Terra collapsed, engulfed the ecosystem. Celsius, 3 arrows. Yeah, we'll just have to wait and see, man. We just know that it's cyclical, so what goes down must come up. But it's kind of down to you. Like, you see what happens with NFTs. Like, people will conflate. Sometimes, like, there are projects with good NFT utility, but generally, what you'll see, like with PFP NFTs, it's literally just sometimes you will see people inflate the value artificially, and like people can literally just just add money, like send each other money basically, and pump up the price, or just inflate the value, the perceived value of the asset and of arguably that whole NFT space as a whole, which gets people to buy in, and it's a whole thing. But then also growing pains, isn't it? Growing pains. So like a bear market does this thing, like they talked about an acid test. It's literally a boot. This was an analogy that was talked about within the DAO. I don't remember who it was that was talking about this to me, but like someone was talking about how it's like a boot, a giant boot. Like when Loki in the Avengers was like, an ant has no quarrel with a boot. Literally, like anything that shouldn't survive being stepped on is not going to survive in a bear market. And that's a good thing. It's a self-equating system, because if you cannot handle if you're not built to withstand the crypto winter, then you die out, bro. That's how evolution works as well. And this is why we shouldn't really worry. Like, we're talking about, oh my god, is it gonna go up, is it gonna go down? It's going to either go up or down. It's probably going to go down a little bit more, and then it's going to go up. That's what's going to happen. It's going to go down a little bit more, and then it's going to go up. How much it goes up by, how quickly all of that happens, and what capitalization we see from that bull run, as in, like, capitalization, not in, like, some finance sense, but, like, what do we do with these amazing ideas that people have? What do we do to change the world, to actually use this amazing technology the way it was meant to be used? And what does the world kind of start to look like? Do we see full financial freedom? Do we see just better structure within, like, society, but also, like, infrastructure? You know, the speed at which we operate, the way that we communicate, the way that we do finance, the way that we do everything, the way that we learn, the way that we just operate as humans is going to be enhanced, right? Now, what that looks like, how much we get out of it, is dependent on us. It's dependent on everyone that is involved in the crypto space, in the DeFi space, in the Web3 space, whatever you want to call it, in the bankless space, right? Every single one of us, whether you're, like, just stumbling across this video on YouTube, whether you're sitting on Discord right now, whether you've been in crypto for the last fucking since its inception, or if you've been a traditional finance guy since 1982, like, it doesn't matter. You are all equally, I don't want to say responsible, but equally empowered to make change towards a more positive outcome from, the cyclical nature of the markets. So this is why people say the billionaires are built during the bear markets. It's not because, like, the bear market has some fucking spiritual essence that suddenly unlocks some mutant X gene in your brain and now you're a brilliant entrepreneur. Like, no, that's not what happens. It's pressure, it's evolution, survival of the fittest. And it's not fittest in terms of who's the strongest, who's the most, like, oh, look at me, I'm really strong. Like, no, it's what is fit for the environment. What is a good fit for the environment? And when the environment is crypto winter, what is a fit? A fit is something that survives crypto winter, something that can withstand it. So let's build things that can withstand things like this. That would be pretty dope, pretty nice. Let's move on from that. Let's talk about the let's go through the next couple of articles. Crypto recaptures 1 trillion market cap. BTC hits 22K. ETH is giga mooning. Okay, so 8 hours ago, we've had some bullish news. Joseph is very excited. The total market capitalization for all of the cryptocurrencies has surged past 1 trillion in a day of big old green candles, big green candles. Cool. Bye-bye Monday blues. Hello bullish news. Crypto, man. Y'all fickle. The total crypto market capitalization has retaken the 1 trillion USD level. The crypto market cap is now almost as valuable as all of the silver on the planet. That's interesting. A price pump for BTC brought the world's most decentralized cryptocurrency into the 22.5 range. 22,500 range. While ETH enjoyed a double-digit giga pump. We covered that already. The combined efforts have culminated in a 4.8% pump to the entire crypto market, lifting it to a recent high of 1.02 trillion dollars. That's just a lot of dollars. Crypto market is back over 1 trillion, Cointelegraph. Is it too early to start getting bullish? It's never too early to start getting busy. You know what I mean? Bitcoin reclaimed the meme-worthy target of $420 billion in market cap. Beautiful. Let's have a moment of silence just to respect that. Sweet. While Ethereum is sitting pretty at a total market cap of $180 billion, having added more than $20 billion in the past 24 hours. As per the below graph, the last time that the crypto market crossed the $1 trillion level was on June 13th. This is a chart. Look at that. Amazing. A reminder on market capitalizations. In the case of Bitcoin and most mined cryptocurrencies, the market cap refers to total value of all mined coins. So for Bitcoin, it's simple. Multiply the total number of Bitcoin mined since Jan 3rd, 2009, which would have been 19,096,775 by the current. So take that and multiply it by the current price. That would be like 22,000. The $1 trillion mark was welcome news to crypto advocates on Twitter. Bitcoin maxis excited. They were quick to celebrate the momentous milestone, while some, such as Donald, Crypto Donald over here, queried whether the new price levels could indicate a bullish reversal. This is what we looked at before. I think I came across this tweet. It's looking familiar to me, but I'm sleep deprived, so I'm not sure if I covered it on the stream or if I came across it during my regular scrolling. But Donald is basically asking, now that Bitcoin is up and ETH is gigamooning, at what price level would a new bull market be confirmed for you guys? That's an interesting question. I do not have the answer to that question. Indeed, the beaten down market is eager to bask in some bullish news, given that the fear and greed index is sat at extreme fear, or just regular fear, for months on end. Caution, fear and greed index still sits in extreme fear. Look at that. Mental. Nonetheless, before reaching for the champagne, spare a thought for the previous crypto market cap all-time high. It tipped the $3 trillion mark, oh my god, in quarter 4 of 2021, meaning 2 trillion has been lost. But man, we'll rally. The crypto market cap reached the same value as Apple stock in April 2021 before surpassing 3 trillion, excuse me. But right now, Apple is valued at about 2.4 trillion, and crypto sits at 1. So there are little ways to go. But we're in a tender little time. We're in a tender time in between a lot of change. We've got regulation around the corner. We've got Ethereum merge around the slightly bigger corner. We got September. Potentially a bear market that lasts for another 8 months, maybe. But what we do know is that at the end of that period, we are going to rally. Whatever that period is, it's not going to be fucking 8 months. Might not. Might be. But whatever the period is, we are going to rally. We can use that time to build, to buy, to hold, to diamond hand, to get educated more than anything. Honestly, I don't want people to just hear us say like, oh, it's going to go back up. It's going to go, buy the dip, and then just like sink your money into some fucking idiot dude bros crypto scam. Like, don't do that, obviously. What you should do is buy into educating yourself. That is the main thing to do. Always conduct risk assessment, always do your own research into everything. But also learn, because you learn so much from just being involved in a space, from having a community, from just being in conversations and hearing people talk about crypto. It gives you this is how humans learn, man. This is why you learn a language quickest when you're literally airdropped into Italy and you have to like try to communicate with some grandma and ask her like how to get the bathroom, and you're like, why is there a bicycle up my ass? And like she's like laughing at you. Like literally you learn on the fly, right? By being involved. So use this time to get involved, because trust me, as soon as the bull run comes, like everything is going to be popping, and you're not going to have any fucking clue what is going on, because everyone's going to be doing something. Everyone and their grandmother is going to be doing something, right? And everyone's going to try to like, it's just a very active time. So before you go to war, you got to go to boot camp. We're currently in boot camp time, boot camp environment. So get into that boot camp mindset, basically, is what I would say. Sweet. So we covered that. Let's talk about India. What's India doing? So the Indian finance minister reiterated RBI's stance. Who's RBI? On the crypto market, claiming it's driven by speculation. Okay, sweet. India needs global collaboration to decide on crypto's future. Nirmala Sitharaman, who is the finance minister for India, has called a global collaboration on cryptocurrencies, assessing their pros and cons, to form a common standard and taxonomy. Addressing a question on cryptocurrency in the Lok Sabha, the lower house of the Indian parliament, Sitharaman said that the Indian central bank had advised the government to prohibit the use of cryptocurrencies as it poses a risk to financial stability. Okay, I heard that India had decided to just ban crypto. Oh, did I? I think I did. But no, it seems as though the central bank has just advised that the government ought to prohibit the use of cryptocurrencies because of potential risk to financial stability. But the government is looking for a global approach. So basically, um, inside of India, the finance minister is saying like it's a bit risky in it, but like if everyone else is gonna be in on it, maybe we can succumb to peer pressure and like do something. It seems like that's where they're kind of stuck at. Um, so she goes on to say, Sitharman goes on to say, any legislation for regulation or banning can be effective only after significant international collaboration on evaluation of the risks and benefits and evolution of common taxonomy and standards. I mean, I feel like the world yeah, we're still in the infancy. So this is what we're seeing. It's more global collaboration. Like we saw South Korea and America, but that was over Terra Luna. But see, this is what it is, man. Like I talked about self-equating systems. You see Terra Luna crash. That was a huge fucking messy thing. And what does it do? Like literally, what does it cause to happen? It causes nations coming together to serve justice in the crypto space, which is a beautiful thing. It's a nice thing. Like it sucks that Terra Luna happened, but these things do happen. I'm not gonna commit to saying that they're good things or they happen for a reason or any of that shit, but these things do fucking happen. They're natural. Negative things happen, positive things happen, ups happen, downs happen. At the end of the day, it's all supply and demand, man. It's literally ups and downs and resistances and supports, and it's just a system trying to equate itself. That's how you got to think about everything. It's just well, actually, no, don't. Again, grain of salt, always. Anytime you come to a crypto news episode, just bring like a tub of salt with you, and you should be good. So she's also reiterated that the current stance that the central bank is taking is based completely on speculation. She adds that if the value of fiat currencies is anchored by monetary policy and their status as legal tender, that gives you credit, like security with what you're doing. But the value of cryptocurrencies rests solely on speculation and the expectations of high returns that are not well anchored. Now, that is, I guess, well, it's not completely unfair. Well, I don't know. It's not completely fair to call this a overgeneralization. This is something of a generalization, I suppose. Um, because we're seeing like there's a palladium backed stablecoin that's supposed to be coming out. There's an electricity backed freaking stable. You don't get much realer than electricity, bro. But it's like I said, infancy, evolving space. We'll have to see what happens. RBI is the Reserve Bank of India, the Indian Central Bank. It makes sense. Okay, so they've maintained an anti-crypto stance since 2013, just like a little Janet Yellen that I know, issuing multiple advisories against investing in digital assets and even prohibiting banks from offering services to crypto firms in 2018. Banking ban was eventually overturned after a Supreme Court ruling in 2020, while the government is yet to decide whether to move ahead or not with a ban. To regulate the nation crypto sector, the crypto sector that's in its infancy right now, the government was relatively quick to propose and implement two crypto tax laws, which have promptly wreaked havoc on the budding crypto industry. So during the January parliamentary session, the finance minister announced a 30% tax on unrealized gains and a 1% tax deduction at the source. The laws were heavily inspired by the country's gambling and betting laws, resulting in an instant decline in trading volumes across exchanges just weeks after the new 30% tax came into effect. The trading volumes and trader interests plunged further after the 1% tax deduction at source came into effect on the 1st of July. Many thriving crypto unicorns, hopeful of a positive regulatory approach, have started shifting their bases to crypto-friendly legislation such as Dubai and Singapore. And what does that do? That is self-equating system. That is literally, it's not random. Nothing is random. Sweet. I think that brings us to a good conclusion. I think it's been an interesting kind of roller coaster ride of not even a roller coaster ride. What is the theme for today? It's basically that ETH and Bitcoin are kind of rallying. We're in the infancy of this industry as a whole, which means that this bear market is, we talked about the bear market, the potential for a bull run, the potential for an 8-month bear run. We talked about the cyclical nature of the markets, and obviously September as a potential really interesting month, just a really interesting period in history, potentially, you know, if the merge does go through and regulation does continue, like if this stuff continues, if we continue as we go, then we should be good. But, you know, just like the markets, you could get a big fuck you candle. You could get another Terra Luna crash. You could get more, just see this contagion from Celsius and 3AC and all this stuff just freaking spread across the board. And you could see things get even worse. But hey, that does not change the fact that you are in boot camp. And war is happening. If it's September, when I say war, it's going to be the bull run. It's going to happen either September or fucking September next year. Who gives a shit? At some point, there's going to be a fucking bull run, right? And at that point, you want to be as prepared as possible. So get as prepared as possible. Go to the description right now and go join the Discord, man. I'll see you in there. This has been Dharma. Thank you for being a part of the Cryptoverse DAO. This has been the news on a Monday. Take care. Enjoy the rest of your day. Bye-bye.